Hey, Service Nation. So excited to be with you today. We are going to chat about, we had a guest scheduled. So, those of you looking for the lovely and amazing Andrea Jensen are going to be sorely disappointed because it's just smelly old dude number one. That would be me. Good news is we are still going to cover money, accounting, and your service company. I would say this is probably one of the most important and most overlooked subjects as entrepreneurs, certainly on the smaller side that we do, for a lot of reasons, right? I think a lot of times we feel like we're not comfortable or we don't understand it or we're so far behind we can't catch up. So that said, I got to be totally honest. Jessica's like excited about this topic. Well, I'm going to let Jessica know in on a little secret. I had planned on having Andrea, so I have zero notes in terms of what we're going to talk about. So I'm going to see. You guys will have to give me feedback if we kick butt and take names, or just are terrible and you get no value. So feel free, those of you that are live with us, jump in the chat. Let us know specifically what you'd like to hear about. I will do the best I can in 20 minutes to give you everything that you need to know to feel confident about how to manage your money, how to be successful, and from a financial standpoint. So the biggest problem I think people run into on this one is they either put too much time or not enough time into it. And I shouldn't even say to, hey, Bobby Menendez, good to have you. So I shouldn't even say too much time because that's really not the case. They don't know where to focus, so they get overwhelmed and run around crazy and don't get anything done. Or they just kind of bury their head in the sand and pretend like nothing's happening. So I want to make sure that none of you guys fall into that trap. So the first thing we got to look at is cash. So we'll kind of go through the big documents and things that you're going to need and why they're important and how to track them. But without tracking this stuff, you are leaving your business open to some nasty surprises, right? I won't say well, it may be common. The number one reason businesses go out of business is lack of cash. And I would have thought, well, sure, of course they go out of business for lack of cash. That makes sense. But when you think about it, I didn't say profit. I think when I first heard that, I'm like, yeah, they don't make enough profit. Obviously, they go up, but it's not profit; it's cash. So the first thing we need to understand is there's a difference between cash and profit. Um, you can be profitable and have no cash, and you can have cash and be unprofitable. The problem runs in when you don't know which is which. So many businesses, certainly kind of below that $1 million and scarily some above that $1 million mark, do kind of checkbook cash flow accounting, right? Which is, I have money in my bank account, therefore I'm okay. Or I don't have money in my bank account, therefore I'm not okay. The problem is you can absolutely have money in your bank account and not be okay and not even know you're not okay, which is a scary part. Because if you know you're not okay and we have time to fix it, not ideal, but at least we can deal with that. But if you think you're okay and you're not and you don't know it, what happens is, had you been paying attention, you would have known. I shouldn't say had you been paying attention. Had you known the right kind of data to look at, you would have been able to see it and take action. But what happens is you're already in the red, you don't even know it. And when the cash runs out because you've been in the red for weeks or sometimes months, you don't really have any good options and it can get really scary. Um, so that's where that comes into. And the reason we want to look in this is, again, cash in the bank, I don't even like looking at it, right? It's an indicator, but not really. You want to kind of know it really is just an indicator of what happened before that got you to this point. It doesn't really tell you what's going to happen tomorrow. So it's possible I have $1,000 in my bank account, which is for a business, obviously very, very small, but I have no payables and I've got $1 million in receivables, 80% of which should come in this week. Even though I don't have a lot of cash, that sounds okay. When you start getting more data, I could have $50,000 in the bank. I got to be fine if I got $50,000 in the bank. The problem is that I have $50,000 in the bank and I have no receivables, very little receivables, and I've got $500,000 of payables, and they're all due coming up this week. I'm screwed, right? So we got to understand the difference between cash and profit. Profit is, if you do your balance, your profit and loss sheet correctly, what's at the bottom, right? Basically, profit and loss is just income versus expenses. Here's all the money that came in. Here's all the money that went out. At the bottom of that, whatever the difference is your profit or loss. Super simple. And real quick, by the way, people, this is something I want to clear up because I think a lot of people have this confusion. They think they do accounting or they need someone to do their accounting. And their accounting is like creating all these things and doing all this work. And it's like very confusing to them. It's really not. All accounting is recording the money that comes in and the money that goes out. Literally, that's it. So the money that comes in, there's really a couple ways that can happen. One is in a receivable, which isn't any cash that comes in, but it would be money that you earned, right? So that would be by way of an invoice, right? If we invoice a customer, say we did work and we invoice them, on the accrual side of our accounting, we've accrued that income, right? So say I did some work, I did service for a guy, I give him a bill for $1,000, he owes me $1,000. On the accrual side of my business, in terms of accrued income and expenses, I would have that as a profit, $1,000 in profit. On the cash side, I got nothing, right? When that check comes in, then I've got cash. So we can either accrue money or we can receive money. You got to make sure we understand the difference between that. Perfect, the worst example of this, because it happened to me. It's always like, hey, things are funny when they happen to other people. They happen to you, it's not so funny. I had a business that made $500,000 in profit in a year, which at the time for me was a lot of money. I was really excited about it. Problem is, at the end of the year, I had no cash, and I asked my accountant, like, "Hey, I'm confused. Why we made look at my P&L here. My profit and loss says right here. We made X millions coming in and X millions going out. There's a $500,000 difference to the good, right? We spent $500,000 less than we got. Why don't I have any money? Where's this $500,000?" And he took me to my accounts receivable sheet, which so many of us ignore. And my accounts receivable, because we'd grown really fast that year, my accounts receivable had grown in that same $500,000. So if I was owed $500,000 at the beginning of the year, I was now owed $1 million. So all that happened was that entire profit that I made, I do the big air quotes because I didn't get any of it at that point, went to receivables, right? So I didn't, that distinction, we need to know the difference between a receivable, which is nice, but we can't pay payroll with it. We can't pay our rent with it. We can't take it out of the business. And sometimes you can sell them and factor them and all that sort of stuff, but we certainly don't want to be in that position. So first and foremost, we got to understand the difference between the promise of cash, a receivable or an invoice or money owed to us, and cash. Cash we can spend, the promise of cash we can't. And as much as we want profit, we want cash profits. They're very, very different. So accounting is really just accounting for or writing down or paying attention to the money that comes in, either with an invoice that's going to come in. We got to, put that down. The cool thing is you can just make an invoice. And the cool thing, guys, gals, if you're under like 5-6 million in revenue, QuickBooks is just fine. It does. It's a great little tool. It's cheap. It's easy. Everyone knows how to use it. Stick with that. I've had car dealerships and construction companies where we needed big fancy accounting system and they suck. So be glad that we're in a business. Most service business I know, certainly under that kind of $3 or $4 million mark, with rare exception, need something fancier than QuickBooks. And so just use QuickBooks. All that to say, if whatever accounting you're using, when you earn money, you invoice somebody, right? Even whether they pay it or not, you're going to send them an invoice. And if that invoice goes unpaid, it becomes a receivable, right? So you don't have to do anything. You just put invoice to, Steve or whatever, $1,000, that goes to receivable. As soon as Steve pays his $1,000, you receive the cash and that receivable goes to zero and your cash goes up $1,000. Super easy. That's on the receiving money. On the paying money, it's the same thing. There's two kinds of money that you've paid and money that you owe. That's literally it, right? So payroll is a perfect example, probably the biggest example of this. People start doing work for you today, but you don't pay every minute that they do an hour's worth of work. You pay them $20, whatever the case is, right? You accrue that debt for a week or 2 weeks or depending, whatever your pay cycle is. So that's a perfect payable. So all you're going to do is write down or account for, put into QuickBooks, hey, this guy worked this many hours and we owe him this much money. And then it becomes a payable. And then when at the end of your pay cycle, when you pay it, the cash, your payable goes down and the cash goes out of your account, right? So that's really it. And that's the most complex one is payroll. The easier one would be your rent, right? I owe $2,000 this month in rent. So for the business, obviously we want to keep our business and our personal separate, but that's a whole different topic for a whole different time. So we want to keep our, so for August, let's say, and this is why cash and accrual is a big deal. Let's say for my August rent, August 1st, I pay my rent for August. Great, $2,000. And then for September, August 29th, I'm like, oh crap, I better pay the rent. I pay that one. What's going to happen on a cash basis is going to show if my rent's $2,000 a month, I paid $4,000 a month in rent in August, but nothing in September. So the way we overcome that is we receive a bill for our for the rent, and then we go, okay, great, I owe $2,000 in rent, and I date that bill. For August rent, I date it August 1st. For September rent, I date it September 1st. So as long as the bills are dated properly, when you run an accrual-based profit and loss, everything's going to come out right. Regardless of when you pay that bill, you accrued it on the right day. So the good news is, I know that was kind of complex, but the beauty is that's it. That's all accounting is. So everyone thinks there's all this work and complexity. There's really not. It's just writing down money that is owed you via sending out invoices, or you don't even have to send them out. Just make an invoice in QuickBooks and be like, oh, this money's owed. And then when the money comes in, match it up. Go, hey, I received that money that guy owed me. That's it. And then when you owe money, you're just going to make a bill, right? That's, hey, I owe this money. And then when you pay that bill, QuickBooks automatically match it up. That's really all that you do for accounting. People think it's complex. You got to do all this stuff. It's really hard. It's really, really not. You just record all the money that you owe and when you pay it, and all the money that's owed you and when you receive it, and you put it to the right thing, right? So under rent, I'm going to put rent, right? Under payroll, I'm going to just make sure when there's a line, you can put it what you want. Just put, this is for payroll, or this is for cost of goods sold, or this is for whatever it is you're doing. So it's super, super simple. A lot of people think accounting is a bunch of stuff, or I've got to know how to put together a P&L. You don't put together a P&L. If you do the things we just talked about, you just tell QuickBooks, show me a profit and loss for the statement. And as long as you've entered your expenses and your income in properly, it'll pop up. So that's the first thing we need to know. It's not that tricky. It is totally okay for you to have an accountant help you, or a bookkeeper help you do all this stuff. The one thing you don't want to do, and I hear this all the time in coaching, is people go, oh, my accountant handles that. When I ask them pertinent questions about their business and their funding, oh, I don't know if that's my accountant. Spoiler alert, owner of cleaning company or owner of service company, if someone says, hey, what was your revenue last month? And you go, I don't know if that's my accountant. That's a really big problem. Your accountant doesn't have any responsibility or exposure, right? If you lost a bunch of money, your accountant ain't going to write you a check. They're going to bill you for the work that they've done, whether you make or lose money. So basic things that we need to know are, and there's really just 4 of them: sales. Most owners know that, what their sales were generally last month. And again, it doesn't have to be to the dollar, but if you're like, I have no clue, that's a problem. Cost of goods sold in the service business. What is this service that we are providing cost us? And depending on what business we are, there can be hard materials and labor, and some of us might just be labor, right? So for pool cleaners, the chemicals and stuff might be a very small percentage, and the labor might be higher. If you owe, if it's a accounting firm, right, your materials are going to be nothing, right? It's just complete labor. And if you own an HVAC, it might be a good part. If you're putting a new unit, right, the labor might be a small part, and the cost might be, or the materials might be a high part. But that all makes up cost of goods sold, the actual thing that you're selling, right? Basically, if I buy a car for $1 and sell it for $2, my cost of goods sold is $1, right? So you need your sales, you need your cost of goods sold. After the cost of goods sold, and cost of goods sold, you really want a percentage. So sales you want in dollars, right? It matters if it's 100,000 or 200,000 or 10,000. Cost of goods sold, the number doesn't really matter. It's the percentage, right? So if someone tells me, hey, Mike, my cost of goods sold last month was $50,000, that means nothing to me. I can't, there's no value in that. But if they say it was 30% or 60%, now we've got 60% of your sales, right? So the cost of goods sold, we really only care about in percentage of sales. And that's going to leave us with our gross profit. So total revenue minus cost of goods sold equals your gross profit, which is handy dandy. Below your gross profit is your expenses, your overhead. Sometimes you'll hear accountants call this your fixed expenses because they say the same. So cost of goods sold go up and down depending on how well you, how much you sell, right? If you put in 100, if you clean 100 pools this month, your cost of goods sold is $1 going to be higher than if you clean 10. Right? That's called a variable cost, or your cost of goods sold. Your fixed cost stays the same, right? My rent's the same $2,000, whether I clean any office or clean any pools or not, right? So the fixed expenses, we want dollars and percentage, right? We kind of want to know what that is. And then what's left over is our profit. So that's really it. You don't need to know. Knowing nothing is a terrifying way to go. Trying to track every little thing and not knowing why it's important or how it's important is going to kill you. So let's talk about each of those numbers. Gross sales, I think everybody gets. The bigger we sell, the better we can do. The problem people get is they focus too much on gross sales, right? They'll go, okay, I'm growing. I've had this over and over and over again. Guys growing and growing, or gals growing and growing real fast. But then they're not able to, they don't make any money. And that's a killer, by the way. That one of the biggest myths in accounting, if you're writing stuff down, taking notes, here's a writer downer. This belief of I'm not making any money now, but when I grow, then I'll be profitable. Because we don't understand overhead also grows, right? We kind of get the idea like, all right, it costs me, whatever I'm doing, whatever service I'm providing costs me half, right? If I sell $1,000, it costs me $500 to provide that service in labor and materials. So of that 500, I've got money left over, but my overhead might be 2 or 3 thousand. So, or might be enough where I'm like, oh, I don't make any money now, but I'll grow. Once I grow, then I'll be profitable. The problem is people don't understand their overhead grows. They always think, oh, overhead won't grow. It'll stay the same forever. It doesn't. I promise you, Microsoft has more overhead than your company. And so, so the bigger you go, the harder it is to stay profitable. So don't fall for that. I'm not profitable now. I'll grow my way out of it. So the big thing with top line revenue is we only care about it as it relates to profit, right? I would much rather be a $300,000 company making $100,000 in profit than $1,000,000 company making $50,000 in profit, right? There's a lot more risk with that. So with the top line, don't get too focused on that. We only care about the top line as it relates to bottom line, profit or loss, okay? So focus, yeah. So we want to know what it is, but don't hyper focus. Most people hyper focus on that, especially when it gets to weird. I want to make $1 million a year. I want to make 100,000 a month. I want to make 2 million, 5 million, whatever that case may be. Those are all vanity numbers. They're fine. But trust me, the most vanity is to have a bunch of money in the bank. So focus on the profit. Okay, so your gross margin. So cost of goods sold is what you have to provide it. So you need to make sure that's not too high. There's not enough margin left over. And you want to make sure there's enough money in there to do the job well, right? So if you can't do the job and you're trying to like, oh, I'm going to low bid it and try and half-ass it, that's a great way. That can make you money short term, right? Kind of screwing people like, oh, I'll promise you this, but I won't bid enough, so I won't do a good job of the service. Obviously, that's not a good long term strategy. So the cost of goods sold, you want to make sure as a percentage leaves you enough money for overhead and profit, right? So sales, gross sales revenue, don't get too fired up on that. That can be growing. You could be making less profit. We never want that. Cost of goods sold, you want to make sure that as a percentage, it's enough to get the job done effectively, but small enough to leave money for profit and overhead. Overhead is the part that is where the magic comes. A lot of people forget overhead. They're like, oh, if I just, especially people that started, I'm an electrician and I started my electrician business. And I didn't have any overhead. I just had my truck and me, and I just kept all the money, right? And we think, oh, that's how it'll be as we scale. People are shocked, when I tell them, hey, a healthy service business might make 20% net profit. If it's an electrician in a truck, he's used to making 80, 90% profit, right? So they think, oh, if I did, $150,000 in revenue for my company, that's just me, and I kept 123,000. Wow, if I made 200,000 in revenue, I'd be rich. But that's not the case, right? Because you start getting overhead and you can't do so much stuff. So the big thing is you want to make sure that you have a fixed amount of profit at the beginning of your company, and you always keep that steady. You don't want to let that get away from you. All right, last thing, we'll end up where we started, is cash, right? So there's absolutely the possible reality where you can have lots of profit and not be cash positive. And the way you do that is receivables, right? I do a lot of work and I don't get paid for it. I do corporate accounts. They tell me they pay net 30 or net 60, meaning I do the work today. I bill at the end of the month. I get paid 30 or 45 or 60 days from that, assuming that they don't slow pay me. And then even then, what if there's bad debt? Now I'm trying to collect a 6-month. It's the worst, right? So this is one of the things we teach right off in our process is we want to be cash positive. And the biggest cash suck I've found, people would think would be being stagnant or losing money. Not that those are helpful, but the biggest cash suck I found is fast growth. So that's what'll really kill you when you're doing $500,000 this year and you grow to $1 million. You're like, wow, look at me, I've doubled my business, and you feel great, but you don't watch the profit well enough, and you definitely don't watch the cash. You can be in my situation where you make $500,000 of profit, but you don't have any money in your bank because your receivables grew by $500,000, right? So really important that you understand your key numbers, which are gross sales, cost of goods sold, total sales, cost of goods sold, gross profit, overhead, net profit, in percentages and dollars. You know where your cash is, right? If you make sure that your receivables aren't creeping up, right, and that your cash profit is as big as your or that you look at your cash profit as much as your accrued profit, and that we're not just profitable, we're cash profitable, and we're not just profitable in some fairy tale land when we double our business, but we're profitable today, knowing it's harder to maintain that profit percentage as we get bigger. It's not easier. So a lot of people think, well, I'm at 10% profit now, but when I get bigger, if I double my company, I'll move to 20% profit. If you're not 20% profit now, it's hard to even keep your profit the same, never mind make it go up as you grow, certainly in the service business. So that's where we're at. Hopefully that kind of gives you some confidence and some comfort around your numbers. I don't want you to get too overwhelmed because what people will do is they'll skip out and leave it and kind of be like, there's nothing else, I quit, I'm not going to do it. And that's a great precursor to getting your butt kicked. So if this makes sense, you're like, holy crap, I need this, I like it, I want more help, go to growmyservicecompany.com. You can get all the cool stuff that we offer. As of now, we don't even have any products. Our book, $1 Million Service Business Secrets, is finally out. If you search for it on Amazon, it's there. I don't know if Lindsay can put up a link or not. But I think there's also a link at growmyservicecompany.com, as well as getting access to the Facebook group. So if you need help, if you're digging the show, if you want more, subscribe, rate, review, refer a friend, reach out to us, let us know how we can serve you. And appreciate you hanging out, and let us know what topics you'd like to hear in the future. We'll talk soon.